only on Bloomberg Quint.
Hello and welcome to Ask PQ on Bloomberg Quint Live. I'm Alex Matthew and this is the show that gets you answers to all your equity-related queries. And you can send them to us on Twitter, Facebook, YouTube and WhatsApp, or you can call us on 022-4540-4141. Alternatively, you can mail us at askbq@bloombergquint.com. Just make sure to add the AskBQ hashtag. Now, our two experts of the day who are going to help you get answers to all of your questions are Amar Singh of Angel Broking and Parthiv Shah of TRACOM Stockbrokers, and they're here to answer all of your queries. Thanks so much for joining us, gentlemen. Now, before we get into the individual queries, which I'm sure all of you who have joined in on social media are sending already, let's take a check of how the markets are faring. It's been a bit of a downer at the start of the week. Both the Nifty and Sensex trading essentially with cuts of about 0.5% each. And essentially, if you look at the Nifty contributors and see where essentially this movement is coming from, you'll see that right at the top, you'll see Tata Consultancy Services, ICICI Bank lending a bit of strength, TCS coming off the highs of the day. But on the losing side, you'll see the HDFC Twins and you'll see Reliance, the big heavyweights, pulling down the market. Let's also take a look at the broader markets now and see where they're faring. There's broad weakness across the board. You'll find that Wednesday and Thursday saw some strength coming back to these indices, but Friday you saw a big cut and that extending today. Pull up the small cap index as well. It's trading with cuts of about 2.4%. Now, just to give you a sense of the market breadth, they're tilted significantly in favor of the sellers. It was almost 4:1. I think that essentially holds true even now. And just highlighting a few sectoral trends, you'd see that the pharma sector is doing particularly badly in trade today. Most of the blue chip pharma stocks, Sun Pharma, Dr. Reddy's trading with cuts of, in Dr. Reddy's case, nearly 3%. Cipla also trading nearly 2% lower. As I mentioned earlier, sugar stocks are bucking the trend, so to speak. If you can pull up Balrampur Chini there, trading up 6%, Dhampur Chini 7%, 7.5%. A few earnings also before I go to earnings. In fact, auto is also trading with cuts today. It saw a strong April, but then it came back and had significant losses in the month of May. A few earnings reactions that I have to point out today. Prabhat Dairy is trading strong. It had margin outperformance there, 2 percentage point gain in the margin. Sheela Foam, 88% gain in the net profit for the fourth quarter. What's trading weak? Shasun, essentially, Stride Shasun reported earnings on Friday. It's trading with cuts of 7.3%. It's in fact off from the lows of the day. And you have Ashok Leyland that reported an inline set of numbers, but it had a miss on the margins front. It's trading with cuts of nearly 7%. All right, with that, let's jump to the first question of the day. Karthik Mahadevan writes to us on Facebook. He has 5,000 shares of Granules India that he bought at 150 rupees per share in 2013. Karthik wants to know if he can hold with a 5-year view. Let's pull up the stock and see what it's at right now. Granules India currently trading with at 89.3 with cuts of 6% in today's trade. He's lost money here. I want to go to Parthiv. Parthiv, what's the view on Granules India? It's a long-term call. He's lost money in the counter.
See, I think he's been holding this since 2013, and also again he has a long-term view, which is always a good idea because these pharmaceutical companies, I think they do take quite some time. There is gestation period in terms of the R&D to pan out, in terms of the ANDA pipeline to come out, and also if at all there are any plant-related issues for them to get rectified. But unfortunately, this entire sector of pharma, I think, has been lackluster, and I think we've not seen any sort of recovery, any sort of bounce, or any sort of kind of value play in it. And I think Granules is also in the same boat, wherein I think despite the fact, even if the results are normal, but because the sector is facing a lot of issues, especially pricing issue coming from the important US and the European markets, it is not helping the cause. So at this juncture, especially I would certainly not advise to cost average or add more, though his price is at 150. But I would suggest, I think, if not for 5 years, but let's give it a try to hold on for the next 1 or 2 years. In between that, I'm expecting this sector and many companies in this sector to bottom out. And then from there, I think again the sector will bounce back, because I think overall Indian pharmaceutical companies are resilient for the long-term business and the potential that they have, which gets catered into the US and the European markets. So at least let's hold on this for the next 2 years, and in between that we can review to decide whether to again hold on, or if at all on any rise, to exit.
I got to remind everyone who's watching, do send in your queries to us and we'll take as many of them as possible. I'm going to go live to a query on YouTube. Vicky Raj is asking about Ashok Leyland, one of the stocks that is buzzing in trade today. So he's asking whether it can go, first of all, to sub 100 levels. It's currently trading around that 138 mark, down about 7%, as I told you, in trade today on account of a weak margin performance. Amar, I'll come to you with regard to what the charts are indicating for Ashok Leyland. First of all, is there a possibility that it can breach that 100 mark? And what's a good entry point for Ashok Leyland?
I would say that looking at the charts of Ashok Leyland, the long-term charts, clearly they are in an uptrend. Yes, we've seen some selling pressure coming from almost 160 levels to currently trade around 138 odd levels. But the stock has very strong support in the range of 130, 132 levels. So that could be a very good level to buy Ashok Leyland, because if that level is taken out, then it could head lower towards 120 odd levels. But the overall uptrend remaining intact and some selling pressure coming into the stock, any correction should be used as a buying opportunity till the time we see a change in trend on the long-term charts as well.
All right, that's a view coming in on Ashok Leyland. Let's take another query on Facebook. This one from Subash Singh, who's asking about two counters that have been in the news a lot in the recent past, JP Infra and JP Associate. He's asking what the long-term prospects are for these two counters and asking whether he can buy it with a 5-year view. Currently, those stocks, in fact, JP Associates very volatile, down about 16% in trade today, and JP Infra down about 5%, lower circuit hit there. Parthiv, what's the view here on these two counters? Should an investor, retail investor, touch these with a 12-yard pole?
See, I think, very frankly, I think every time when we discuss these stocks and these debt-laden, tainted companies, I think we always say that stay away, especially for retail investors who have very limited capital. I think there's no point to even think about entering these companies, or even if one has a position, I think on any rise one should exit. Because these companies, I think they're going to take donkey years in terms of trying to turn around. And also, I think the biggest problem is that there are too many stuck projects. It isn't like a steel company wherein, at least the asset is there, and with the steel sector doing well, at least there is some sort of sale. But again, in that steel company, we have seen that any sort of sale has not benefited the common shareholders of the company. So same case in point, whether we talk of JP Infra, JP Power, or for that matter, the parent company JP Associate, I don't see any major hopes, and these are like definitely the stocks which could trap the retail investor. One would think that what's harm in buying a 20-25 rupee stock, but the same if it were to go to 12-14 rupees, it means 50% of your capital is eroded. So that's my rationale, that totally avoid these companies, and even if they were to reduce the debt by selling the assets, they'll be selling the high cash flow generating assets. So the leftover for the common shareholders is hardly anything. So I think absolutely at the best, these stocks are best avoided.
All right, that's the clear view coming on the JP Infra and JP Associate stocks. Let's go to a query on YouTube now. Nikhil, one of our regular viewers, is asking for, it's actually a two-part question. One, a short-term view on Jamna Auto and a long-term view on Mart. Let's pull up Jamna Auto and see what it's trading at right now. Currently around the 87 mark, down about 5% in trade. Amar, I'll come to you for a short-term view based on the charts of Jamna Auto.
Yeah, I would say overall, again, Jamna Auto has been in a secular bull rally. And the long-term charts for Jamna Auto, they continue to be, the trend remains up, and the chart continues to be strong. Yes, we are seeing some selling pressure coming on the daily charts from a short-term perspective, because it's not able to take out the 100 and 105. That's a very strong resistance zone for Jamna Auto. But looking at the stock on the downside, immediate support for the stock is seen around 80, 83, 84 levels. Currently, it's around 87 odd levels. So we'll have to watch out. If 83, 84 holds, then the stock could bounce back from that level. But on the upside, again, it will meet with resistance somewhere in the region of 90, 95. So there could be some consolidation in the stock before the stock takes off once again.
That's a view for you on Jamna Auto. I'll take the second stock, the query on Avenue Supermarts with regard to a long-term view to Parthiv. Parthiv, the stock has done reasonably well in the year-to-date period, up about 14%. It's down in trade today about 5%. Would you say that it's due for some correction?
See, I think yes, certainly, because there will be some sort of supply due to the technical reasons. But I think still, I believe that there will be a lot of buyers in this stock, in this counter, over the lower levels, because I think it's a fantastic business model. It is, I think, doing extremely well, even on this base. I think if you were to see, they're continuously growing their top and bottom line, and they're continuously getting operating leverage, where I think all their return ratios are extremely stable, and also they're trying to improve their margins. So I think overall, they're launching new store locations as well. So all of this makes me very positive about this company over the longer horizon. But yes, I think in the short to medium term, there could be some pressure in terms of the supply that would come due to the promoter having to reduce the stake as per the SEBI news. So I think that's the only reason why the stock is falling. So I think any downside from here to the tune of 5 to 7%, I believe would be a good opportunity for long-term investors to buy into this company, especially in a staggering manner.
That's the view on Avenue Supermarts. Let's quickly go across to a WhatsApp query. P.S. Krishnan is writing into us on WhatsApp, and he wants to invest in Tata Motors, Vedanta and South Indian Bank with a 1.5 to 2 month view. Now, among them, Tata Motors for sure is attractive. A lot of people have talked about the valuations currently, but whether or not it will actually give returns over a 1.5 to 2 month period. I'll go to Amar. Amar, 3 counters here: Tata Motors, Vedanta, South Indian Bank.
I would say first, looking at Tata Motors, I would suggest that he should wait, because the way Tata Motors has been taking out its lows clearly reflects that there is still some selling pressure in the stock. And looking at the charts, technically, even on the short-term charts, there is no indication of a bottoming out formation. It did go into oversold territory, but again, it's again witnessing sell-off. So crucial support level for currently it's around 300 odd levels or so. So very strong support for Tata Motors comes at around 275 to 285 zone. If that level is achieved, then one can look at buying. Otherwise, I would say that one should not buy immediately. Looking at the
the other ones.
Looking at Vedanta, which you asked about. Vedanta, again, if we look at the long-term trend for Vedanta, still remains positive. And on the downside, I would say somewhere around 250 odd levels, that's a very strong support for Vedanta. So if one wishes to buy, that could be a good level to buy, with a stop loss below 240 and a target of 275, 280 on the upside.
And the last one was South Indian Bank?
Yeah, looking at South Indian Bank, what I see is that South Indian Bank overall, again, the long-term trend still remains overall positive. I'm looking at the quarterly charts, looking at from a very long-term perspective. But the medium-term trend clearly reflects that the stock has gone in for consolidation. Whereas on the downside, it's going to be 22, 23, and on the upside, 26, 27. So that's the range that this stock is likely to consolidate in. And till the time the stock doesn't take out the 26, 27 on the upside, it would witness range-bound play.
All right. Abhishek Gupta is writing in, I think on YouTube, and asking about help to build a portfolio. Just by the way, we have a new show on Bloomberg Quint. It's called Portfolio, where we actually bring in a financial expert to help you with building up your long-term portfolio. But I'm going to take your query to Parthiv, because you said that you have 1 lakh to invest. Parthiv, open slate for you. What would you suggest?
See, at this juncture in the current market levels, what I would suggest is to have at least 4 stocks in 4 different sectors, wherein with the 1 lakh investment, one can diversify as 25,000 rupees per in each position. So the first stock that I like is HDFC Life, very resilient stock and must have kind of in the portfolio. The second stock that I like is from the banking space, which is RBL Bank. Again, a very scalable business model and long-term prospects are looking extremely good. The third stock I would recommend a large cap stock, which is Reliance Industries, especially looking at the resilience and the uptick in the petrochemical cycle that we are seeing. I think this will be a good stock to be having in one's portfolio. And the fourth stock I would suggest Maruti at this juncture, again a market leader, and the automotive space is buzzing and will tend to do well. So I think these are the 4 stocks that I would suggest one can start with the portfolio with, and I think then as and when you have more capital, you can add on to these names, or then even pursue a couple of other names, and at least try and have a 5 to 10 stock portfolio to begin with.
All right. Well, this isn't an individual stock-related query, but I'm still going to take it across to Amar. Amar, there's a viewer that's asking for the levels that he can watch out for with regard to the Nifty and Nifty Bank over a week's time.
Yeah, looking at the way we're seeing some correction in Nifty. So I would say that somewhere around 10,470, 10,500, that should act as an immediate strong support zone for Nifty. Because if 10,470, 480, that level is taken out, then we could see some sharp correction in Nifty towards 10,400 odd levels. Whereas on the upside, it's likely to meet with resistance around 10,660, 670. That's going to be the first level of resistance. If that is taken out, then it can head higher towards 10,720, 730. But short-term trend clearly displaying that any pullback is being used as a shorting opportunity. So till the time we don't see some bottom formation, it could be selling pressure on Nifty. As far as Bank Nifty is concerned, Bank Nifty again has got crucial support coming in the range of 25,450, 500. Whereas on the upside, resistance is now seen at around 26,100 to 150 in the short term. And again, it's likely to find some support around 25,500, 600. There could be some temporary respite and bounce back, but again, some selling pressure could be seen.
All right, a couple of interesting queries coming in on Facebook. Those, by the way, are the levels that you have to pay attention to with regard to the Nifty and Nifty Bank. Aditya Pinto is just logged on and he's asking for a long-term view on a couple of aviation stocks, SpiceJet and Interglobe Aviation. Now, of course, with crude oil prices rising, it's one sector that's going to come under focus again. It's down in trade about 3.9, nearly 4%. Interglobe. Let's pull up SpiceJet and see what it's trading. It's down 11% in trade today. Well, it's not just the retail drivers that are going to be facing the pressure of higher prices. In fact, price of petrol touching 84 rupees in Mumbai, but also aviation turbine fuel, which is going to put pressure on the margins. I'm going to go across to Parthiv for this query. Parthiv, what's the view on aviation stocks? Obviously, no clarity on where crude is heading, what levels it's going to breach. But short term, there's likely to be pain.
See, yes, absolutely. And I don't really find the valuations attractive in terms of the best time to buy aviation stocks is when crude is at peak and, these stocks are at abysmally low levels when they've shown at least 3 or 4 quarters of very bad performance in terms of the margins, in terms of all parameters. No doubt there is a lot of growth in terms of the passenger volume, passenger traffic, but I think that's not kind of boding well in terms of percolating into the margins for these companies. As case in point, we saw in Interglobe Aviation. So I think despite the cost leader struggling in terms of earning better margins, I still believe that this sector, we might see some more pain before it would be a right time to again enter into these stocks at the rock bottom levels. And as such, I think out of the 3 companies which are in the listed space, I would only prefer Interglobe Aviation and SpiceJet, but I think I would prefer a further correction from here, post which I think it would not be a bad idea to chip in, because as and when the oil prices tend to retrace on the lower side, these again stocks and sector would become favorable and attractive. So it's like a contra play right now, but I think I'll still wait for lower levels before entering.
All right, we've got a live caller, gentlemen. Pramod Patil calls us on the show. Pramod, hi, thanks so much for calling in. How can we help you?
Yeah, sir, I recently brought Navkar Corporation, 1,000 shares at 178 levels.
Okay, where in Maharashtra are you calling us from?
Sir, from Nashik, sir.
All right, thanks so much, Pramod. What was the justification for buying this? What did you think of? Did you read about Navkar Corp somewhere?
Yeah, some more investor is purchased, so that's why I followed him.
Okay, you followed him. And do you have a long-term view on Navkar?
Yeah, just for 2 years, sir, next 2 years.
Next 2 years, all right. I'm going to take this query to Parthiv. Parthiv, what's the view on Navkar Corp? It's trading with cuts of about 3% in today's session.
See, I think Navkar Corporation is on a span to expand its capacity. It's a low-cost capex, post which I think its capacity will almost go up by 60 to 70%. And I think no doubt the stock has been a huge underperformer, despite the fact that at one point in time, post GST, such companies were to benefit. The JPTU terminal logjam was also helping in terms of the lot of traffic which was seen out there, and not much of capacities, new capacities had come up. was supposed to help Navkar crop, but I think that has all been delayed. So I would suggest, I think, have a wait period of at least 1 or 2 years in this stock if you want to invest at current levels. And I'm sure, I think things will turn around for the good, and I think the numbers will also start coming in with the enhanced capacity. And as and when the utilization levels go up, they would tend to get better operating leverage as well. So I think give it 1 or 2 years from here, and definitely you can add at current juncture.
All right, let's take, well, Pramod, I hope that answers your question. We've got another query coming in on YouTube, this one from Jivan Fadtare. He's holding 30 shares, excuse me, 30 shares of Mahanagar Gas at 845 rupees. Let's pull up the chart and see what it's trading right now. Currently at 839. He's asking whether he should average. Well, I would say hold your horses at this point. It's not that significantly lower than your buy price, but I'll still take this query to, Parthiv, what's the view on Mahanagar Gas? It's a little too early for him to average, wouldn't you say?
Yes, I believe that the averaging, if at all the company is fundamentally very strong, which NGL is, it's a good business model, should happen at a lower levels and not at a very close levels of your current buy. But nonetheless, I think we are bullish on this counter for the longer horizon. I think it's a fantastic business model, and not much competition can come in, especially in the territories where one operates. So I think NGL does have a lot of plans to scale up their business model in terms of newer geographies where they won. And also, I think the utilization levels from the existing geographies, even place like Mumbai, I think there's a lot of scope of growth for newer connections. And I think definitely this is the future. And also, I think it's a very asset light in terms of the new capex that is being done. Does not require a lot of debt. And plus, I think they are in a position to take care of that with internal accruals, internal cash flow generations. So the balance sheet is not at all stretched. It's a debt-free, cash-rich sort of a balance sheet. And also, they'll end up paying good dividend yields. So definitely for someone having 2 to 3 year horizon, this is a good level to enter, and one holding it, I think, can hold on to it.
All right, there's a question coming in on Idea Cellular. Melvin is asking for a long-term view and whether or not to enter the stock. Amar, this is one stock that's seen significant correction. I think, the overarching theme has been pressure on the incumbent telecom stocks. 50% correction in the year-to-date period, if I'm not mistaken. What's your view on entering the stock? Fundamentally, of course, a lot of people have said avoid, right?
Yeah, looking at this Idea Cellular, what we see is that technically the stock is definitely in a downtrend, and it has been in oversold territory now for many months. So clearly reflecting that there is weakness in the stock. But if you look at the stock from a 10-year perspective, what we see is that the stock has got very strong support in the range of 48.50, because that's where from where the stock bounced back almost 10 years back in 2009, and again so that was a very strong base. So it's so the risk reward ratio for those who want to trade, it can be favorable, because any stop loss below 47 can be used and one can look at buying. But one needs to remember that one is trading against the trend, so profit booking would also need to happen. And the stock on the upside needs to breach, if I look at the stock needs to breach almost 55, 56 levels on the upside for any meaningful rally towards 68.70.
All right, Parthiv, I'm going to come to you with a list, and I'm hoping that you're going to be able to help this viewer. Manoj Rathi, in fact, has written to us, and he's asked for your pick amongst a list of stocks. I'm going to read them out. Kesoram Industries, Tata Motors, Ashok Leyland, or Seat Tires. Very quickly.
Yeah, I would say Tata Motors for sure. I think that looks good, and Ashok Leyland. I think these two companies why I'm selecting out of the list is because I'm not very bullish on the tire sector with the rubber prices bottoming up and going up. Not very convinced. Kesoram, I think, has not been delivering very good on the numbers. So Tata Motors and Ashok Leyland, both are stocks which are operating even in the CV segment, and we are very bullish on the CV segment, at least over the next 1.5 years, where a lot of government spending will percolate into a lot of more trucks being sold in the CV vehicle segment. And Ashok Leyland, I think, has been delivering very good on that set. For Tata Motors, we're expecting some sort of turnaround in terms of numbers of JLR, and a lot of negative seems to be priced in at current price. So I think the stock is very close to the bottom, even in terms of the valuations. So any sort of positive surprise from the JLR stable would definitely pull the stock a lot up. So I think these will be the two preferred stocks that I would suggest one can start buying into right now.
Very quickly, I think we can fit in one more query. Karthik Mahadevan calls us. Karthik, thanks so much for calling in. What's your query on?
Hi, I have a query on Abbott India.
Okay.
I have 100 shares of Abbott. I bought around 4,000, and I'm working with a target of 8,000. So I would like to know the long-term technical and the fundamental view.
Okay. You want both, but when you say long-term, what exactly is?
I can hold as long as I can, 3 to 5 years.
Okay. I'm going to take a technical view first. Amar, what's the view on Abbott? It's currently trading at 6,609. He's bought at 4,000 levels.
Yeah, I would say that overall, looking at the charts definitely, the long-term charts are definitely strong for Abbott India. And also, if you look at the charts, the September high of 2015, which was 6177, that was taken out. So that clearly means that there is some meaningful upside in the stock. And even if you look at the stock has rallied to almost 7,338, and from there it's corrected almost 800 points. So yes, he should definitely hold on to his position. And the crucial support on the downside, which needs to be watched, is 6,200. That should act as a very strong support because that penetration of that would maybe lead to some further sell-off. But otherwise, the stock is definitely in a strong bull rally. He should definitely hold on to his position.
All right, Parthiv, very quickly, do you want to weigh in on this? Your last word on Abbott.
Yes, absolutely. I think hold on to it. A fantastic company, great MNC company stock to hold. Very good balance sheet, new products that they are launching. So yes, I'm absolutely feeling that the viewer selected a good stock, and the target that he's envisaged would be possible over the time frame that he's mentioned.
All right, that's a word coming in on Abbott India. It's a clear hold from both the technical and the fundamental guests that we have on the show. On that note, I'd like to thank our guests. Thank you so much, Amar and Parthiv, for taking all the queries on this show and helping our viewers. Well, that's all we have on this edition of Ask PQ, but do remember, we're just a tweet, post or call away, so do keep your queries coming in, and we promise to address as many of them as possible on our show. Up next is Power Lunch, so do keep watching. This is Bloomberg Quint.